All right, everybody. Stocks by the numbers. Welcome back. Wanted to do an update here on McDonald's Corporation, ticker symbol MCD, listed here on the New York Stock Exchange after the company reported earnings, apparently missed on the top and bottom lines. We have multiple price target downgrades, yet the stock is up here, as you see, about 3.6%. So right now we're sitting here at $261.31 quarter, up 9.25 points here, 3.6% roughly on the day. Market's basically mixed. We have about 5 minutes to go before the close, but if we pull up the numbers here on MCD, we can see the company reported 297 a share on estimates of 307, and the revenue came in light at 6.49 billion on estimates of 6.623 billion. So this is the first time they missed on the top and bottom line in quite some time. However, we can see over the last couple of quarters, we had a slight EPS miss the quarter before and a slight revenue miss before that. And of course, the quarter before was a nice beat on the top and bottom line, and it was pretty consistent before the last couple of quarters. So I originally looked at it, was right here, like the first week of April back in 2023. Stock was like 284 or something. And I said, in my opinion, we have this big rising wedge. We looked at some of the numbers. I felt overall the stock was overvalued. And also, I saw that after like 2020, 2021, after that big event happened, these prices really started exploding. I remember I think it was like every like a month or so would pass, and somebody would pull up McDonald's on one of the apps to order it, or we would take a walk over to McDonald's, and all of a sudden I would see prices increasing 10%, 30%, 50% up from where they were just a couple of months ago, like not even a year prior to that. So basically, in my opinion, what they did was they and they admitted this as well, they kind of outpriced the lower income average consumer, which of course used to be their bread and butter. That used to be the go-to consumer. I mean, it was fast food. We know it's kind of a lower quality meal, but at the same time, it was because it was such a good value as to why, a lower income person would kind of gravitate towards McDonald's, or you're on your lunch break, it's one of the closest things, boom, you go over there. But now you're starting to see lately that the prices have gotten out of control. I know people are posting pictures of receipts, they got like their $20 Big Mac and whatnot. So it's gotten way out of control, in my opinion. And that's why I said many, many months ago that, in my opinion, I strongly personally disagree with the narrative that almost every other kind of YouTube hobbyist here is pushing, with the statement that McDonald's is quote unquote recession proof. It is definitely not. This is a publicly traded company. The number one priority is keeping revenue steady, if not growing, but more importantly, maximizing profits. And that's why, in my opinion, they talk about something like beef being up 10, 15, 20% or whatever they try to tell us over the last couple of years since all this hit the fan. When we look at the price history of something as simple as a cheeseburger or a quarter pounder with cheese, we can see that these prices are up 30, 50, 100+% in some cases. So this is why I'm saying they're outpacing inflation to maximize profits, while at the same time kind of kicking their bread and butter demographic while they're down. And this is why, again, I said, in my opinion, that a lot of people were either A, going to spend their dollars at other franchises, whether it's, like a Taco Bell, which is Yum, YUM, or if it's, even Wendy's. I know they brought back like their deals for like whatever, $5, $6, and, you get a couple of items, you get a little meal. And now, after all of this time maximizing profits and bleeding its consumers dry, what do we hear? We hear that, oh, now McDonald's might start doing, some value deals again here in the second half of the year. Because, in my opinion, again, if we look at the revenue, it has been pretty steady. And of course, it's been climbing again because they chunked up the prices of everything. But it's basically like, I can't describe it. They're pushing away all of kind of like those everyday customers, and they're just trying to completely beat up their loyal I don't know if people are addicted to McDonald's, but I'm sure you can appreciate what I'm saying. The steady, loyal customers who make it kind of part of their diet, those people, again, are now paying, 50, 80, 100% more than they used to. And they don't mind, but every other average person is really feeling it in the pockets, and they're not making a trip to McDonald's. But anyway, as you see, we were about 21 billion going into 2020. Then we come out right up to 23, holding 23, and then up to 25 and a half. So revenue is up roughly 25% just over the last couple of years. And you can see that the net margin percentage was in the high 20s, dips down to about 24.6. Then it jumps right back up to 32 and a half, dips to 26, back up to 33.2%. That is quite a serious profit margin for a company that supposedly got to where it is today for having low cost, affordable, dollar menu, then became the value menu. Now it's just like the side menu because they can't even really call it a value menu anymore, in my opinion. But we have a market cap here, 188.5 billion, PE 21.4. In my opinion, I understand it dropped out of this wedge that we spoke about. It fell pretty hard down into the 240s. I did an update, I think, like a couple of days before we hit the bottom. Then it starts to bounce and rebound going into earnings. This is the last time the company beat on the top and bottom line. Markets were raging. I mean, still are, but markets were raging really during this time frame, bringing the stock all the way up to new highs when it hit over 302, and then it's been down and down. Earnings came out, they missed on the revenue side, stock starts to step down. We get earnings again, the company misses on the EPS side, we bounce it around, and then we start to step it down. Now earnings come out, the stock sees almost a 4% pop. They missed on the top and bottom line again for the first time in quite some time. And if we check out some just news that's coming out today, we can see that basically across the board, they got their price targets cut. Jeffries cuts price target from 320 to 310. Piper Sandler cuts it from 291 down to 279. McDonald's same-store sales down 0.7%. Basically, everywhere you look, in my opinion, this seems like a negative. And this is what bothers me. Again, I will reiterate, I don't care. I'll take it to the grave, and I'll fight you guys tooth and nail if I have to, every step of the way. When you have a fake, overvalued, pumping stock market for no reason, off no solid economic data, the rug pull, in my opinion, is going to be massive. And just because this is like a brand name company in the space, in my eyes, there is no reason as to why this stock should be green today. Literally no reason. And granted, I know I'm coming to you later in the day, so maybe someone read something this morning, so, maybe I missed it or something. Fair enough. However, seeing, again, a miss on the top and bottom line, multiple people dropping their price targets, and same-store sales down, I mean, I'm really not seeing a leg to stand on here. Truist lowers price target from 300 to 295. Stifel, this is probably one of the lower price targets that maybe I agree with more personally. Lowers their price target from 265 to 257. Price target maintained 285. TD Cowen, I don't know, I guess they didn't read the earnings report. Gordon cuts price target from 280 to 272. I love how everyone still has a higher price target than where we're currently trading right now. See, now you're seeing $5 meal deal. Because they know, in my opinion, they have to bring it back. Because they pissed a lot of people off. So now, in my opinion, moving forward, if this deal, hypothetically, gets more people to come through the doors and start to order McDonald's again, maybe like they used to, now what you're going to see is you're probably, in my opinion, going to see beats in the next 1 to 2 quarters on the revenue side when you may potentially start to see the profitability side start to sell off and start to pull back, and more than likely miss estimates, in my opinion, moving forward, at least the next 1 to 2 quarters, if not 3 or 4, depending how long they keep the deals in. Because again, in my eyes, pumping up these prices. Again, they don't really care, it seems like, about the lower income investors. So they're milking their loyal customers, charging them as much as they can, knowing that they're still going to consistently come into McDonald's. And they're basically rolling those profits into the stock. And they were able to climb up again and break above 300, in my opinion, when they really didn't deserve it. But now all of a sudden you see that, oh, revenue's light, then EPS is light. Okay, now we missed on both. Now we have to, reiterate, we have to reinstate the $5 value meal, right? Now we have to start helping people out again. We maximize profits enough. We have to start helping out our consumer again, which makes me laugh because the stock has been doing phenomenally well basically since it hit the board and started trading public. So you would think that you would kind of just continue doing what you're doing. However, unfortunately, we know that greed affects everybody. Sales soften, sounding alarm. Brought in deals beyond app. Struggles in France. McDonald's posts downbeat results, right? Stock is up. McDonald's expects muted price increases in 2024. This is what I mean. This is what these companies do, in my opinion. They push the envelope as far as they can, right? They start charging you $18 for a Big Mac. Then when there's a lot of backlash, then when the foot traffic starts to subside, then when everyone starts to lower their price targets or, boycott the company because the prices got out of control, now they're going to start calming down their raised prices. Now they're going to start reiterating, oh yeah, come back to McDonald's. We got a $5 meal going on. So, I mean, in my opinion, it seems like they always have a pretty sharp group sitting on the board. So chances are they're probably going to be able to turn this around for the stock in the long term. But here in the short term, going into next earnings, even if it drops and then has a little bit of a rebound like we see going into earnings, in my opinion, it really should drop down here in my eyes. I'm looking for $230 a share back to this trend line, which of course would be about a 30-point sell-off from where the stock is currently trading here at 260. And if we back this all the way up, I've got to go back even further. If we back this all the way up, you can see this yellow trend line that I'm looking for at about 230. This is going from the low that it hit back in March of 2003, it looks like, connecting up to the bottom of that candle there, March of 2020, just a couple of years ago. And you can see that cuts up. And in my opinion, I have to say, I think that's where the stock should be. I think it should step down. It should not be up here in my eyes. And it should step down, and we should drop down to 230 going into about October, it looks like. Then maybe we can rally for a week or two going into these earnings due out roughly the third week of October, about 3 months from today. And then we can see how the company reports, pending, of course, on their, $5 value meal that they're now bringing back. McDonald's says consumers trading down, eating at home. Yeah, of course. Of course. Like I mentioned here, I mean, I live in upstate New York, but even here in New York, we go to the supermarket, I can get like a whole, tenderloin for like $6-7. But I'm going to go to McDonald's and get a $13 Big Mac? Like, I just don't understand. So for me, again, even if I had a little bit more money, honestly, I probably wouldn't be spending it at McDonald's. But I know we all think differently, but in my opinion, I do think over the last couple of years, people are definitely eating at home more and more to try to do that belt tightening we spoke about. And again, I think that McDonald's is only coming in, for the most part, still above these revenue estimates just because they pumped up their prices so much. And that steady, consistent traffic, kind of no matter what's going on around them, these people are still going to go to McDonald's. Remember, now these people are paying 30, 40, 50% more. So that's all rolling into their revenue. Consumer spending slows. Again, everywhere I'm looking is basically negative sentiment across the board. But for some reason, the stock is up. Consumer spending shifts, hit revenue and operating margin. Franchise revenue remains flat. Right? Just remember, if this was a smaller franchise and not McDonald's, the stock would probably be down. I want you to keep that in mind. In my opinion, anyway. McDonald's price target maintained $2.95 by Wedbush. See, this is why, again, I appreciate the fact most of these analysts are probably giving them the benefit of the doubt, saying now, oh yeah, if they keep prices in check, if they, start to reinstate this value meal, then chances are, 6-9 months from now, the stock will be up. And I can understand where they're coming from. However, in my eyes, we should go down before we go up. But even in the numbers here, I do think it's trading a little too high for the obstacles that it's currently dealing with. I think we could bring the PE to sub 20. The market cap, if we look at the enterprise value, again, that's what another company would be willing to pay for it. The enterprise value has always been above the market cap for the most part of McDonald's. But here at 188.5 billion, we're still trading almost 8 times annual revenue. And again, I know some of the profitability margins are on the up and up yearly, but if you look even quarterly, you can see how they're stepping down. And we've gone from 35.5% down to about 31%. And a lot of these other metrics are technically down. And if we look at how the company actually looks on paper, again, we can see, look, we have almost 51 billion in debt here as of this last quarter. Free cash flow, 184 billion. This time last year, 192 billion. Cash last year, 3.7 billion. Now it's sub 1 billion. We have short-term assets outweighing liabilities. We have long-term liabilities outweighing assets. If we come over here, total assets minus total liabilities yields total equity. And yes, it's slowly climbing up, but it's still almost minus 5 billion. So this company's sitting here with negative equity plus over 50 billion in debt, with a book value, as you see, again, they're slowly starting to tick it up. The book value right now is minus $6.71 a share. So, again, I know people are going to say, oh, well, it's more of a real estate play. And, I understand all of these different, viewpoints are going to come out. But at the end of the day, we have to call it like we see it. And again, I think that McDonald's, in my opinion, should be significantly lower. And that's why I think a pullback to that trend line, 230, really shouldn't be a question here, especially after this report. But we can see going back the last 7 or 8 quarters, our PE now, they were keeping it up. Again, markets were pumping. We were keeping this PE up here to the mid to high 20s. Now we're down here at sub 21.5. We're trading about 7 times sales, which is the lowest it's been going back the last 7 or 8 quarters. We're trading 19 times cash flow, which is the lowest it's been going back the last 7 or 8 quarters. Enterprise value sitting here 231 billion. I don't know what these people are looking at. Our return on assets is up. Return on invested capital is up. Our gross margin percentage is slightly pulling down a little bit here, but basically maintaining like that mid to high 50% range. But you can see going back this time last year, it was up here above 55.5. Now we're down at 55.25. Operating margin sub 44%, used to be over 45.33%. EBITDA was almost 54%. Now it's down to 52%. Net margin 31.25%. Technically up a little bit from where it was this time last year. This is what I mean. This is why I say, in my opinion, when these companies pump up these prices and they just try to, maximize profits and increase, the net margin percentage while the revenue may be potentially stagnating or now beginning to fall off and pull back, they try to make it seem better than it really is, in my eyes. And that's why I think that the stock is due for a pullback. And I know a lot of people didn't agree with me last time, but, we did technically have that technical analysis lining up for us with that long-term rising wedge. So I had a feeling I was going to be right on that one. Then the company came out and they beat earnings nicely. But since that rebound happened, the company has had mixed earnings for the last 3 quarters in a row. And the dividends, I will say the dividend seems very healthy. Even looking back to 2021, they were paying out 5.25 a share, and now we're up to basically 6.25 a share. So the dividend itself is up about 20% just inside of the last 24 months. So I appreciate the fact, again, it's a brand name, it's a blue chip company, and they pay a dividend, and everyone knows McDonald's. Like, I appreciate all of that. But again, at the end of the day, in my eyes, we kind of have to stop rewarding companies that give us negatives. And I will say it again till I'm blue in the face. If this market was not being falsely, in my opinion, falsely pumped up to these highs, a lot of these stocks that you guys are watching would be down tremendously from the current levels here. Something like Tesla, again, perfect example. It's one of the few companies I see that is basically consistently missing earnings, but, bouncing back, not hitting new lows, climbing back up, still having, 4 or 5% green days and chunking back up because it's become more of a trader stock and everyone's looking at these key levels and they're buying these dips. And when in reality, if the Dow wasn't being pumped here to north of 40,000 and the NASDAQ didn't break 20,000, I mean, something like a Tesla consistently missing earnings should be trading at new lows. And in my eyes, I'm still waiting for that gap fill back down to, I think, like $87 or $84 a share, whatever it is. In my opinion, it's coming. But we can see here, McDonald's was steady, and we have back-to-back EPS misses. And then if we look at the revenue, we have 2 misses over the last 3 quarters. So that's what I mean. The fact that the company comes out today, bad news, everyone downgrades the stock. They talk about how they lost consumers and now they may have to bring out the $5 value. All of this seems negative to me, in my opinion. And if the $5 value meal is going to bring more people inside and put more butts in the seats, then we're probably not going to see that positive reaction for the next 3, 6, 9 months. So here in the moment, in my opinion, stock should be down 3.7%. It shouldn't have closed up 3.75%. I'm sorry, I'm just not seeing it. And look at the way they have been milking the franchisees here. Look at this, just from 2020 to 2023. Revenue up 50% from 10.7 billion up to 15.4 billion. But also here in the States, right? Because they know this is one of the biggest consumer markets where people supposedly have the most, quote unquote, discretionary income, discretionary funds to spend on food and entertainment and whatnot. And if you look, you can see 2020, even during the lockdowns and even before that, you can see revenue was at 8 billion back in 2017 and pulled back to the upper half of the 7 billion mark. And then as we come out of these lockdowns with the hyperinflation beginning to hit even our low-income fast food franchises, you can see we go from 7-8 billion to 8-8 billion, 9-6 billion to over 10.5 billion. So the revenue just from here in the States over the last couple of years, remind you, with more people going there less frequently. Keep that in mind. The revenue just from here domestically in the States is up roughly 50% over the last 3 years from where it was during the pandemic. Absolutely insane. Yet, they'll still come on and tell you, oh yeah, bread is up, 7% over all these years. Beef is up 12% over all these years. So why are costs up 50, 80, 130%? Because in my opinion, obviously that translates to them being greedy, them maximizing profits, and basically just taking care of shareholders. And because people, again, in my opinion, have become so addicted to something like a McDonald's, chances are they're probably going to be able to maintain this revenue. And I do think that the $5 value meal can potentially turn it around. And this is going to be, again, September, so that's right, July, August, September. The numbers coming in for July, August, September are going to be reported the 3rd week of October. So again, if they implement these deals, then we could possibly see them beat again here on the revenue side. I don't know about the EPS side because now it's up to 330. right? They just missed on 307. They posted 297. So that's why I say, in my opinion, this is probably going to be an EPS miss. There's a pretty high chance in my eyes. The revenue may actually come in at that mark if they start to implement these deals again. 6.95 billion, roughly the third week of October. But overall, in my opinion, I have to say, I'm sorry, but I would not be a buyer of McDonald's. And let's switch over here to stock charts very quickly. I'll let you go. We had a spike again, in my opinion, when we should have went down. RSI now approaching 58. They can continue to pump it and try to get it back to the 200-day, but in my opinion, it really should reject that level and drop down even harder. Here, even after this pump today, in my opinion, should immediately pull back about 5 points and go below this 50-day moving average, which, as you see, it has dropped back below it in early March and has been consistently rejecting off of this 50-day for the most part. Because in my eyes, they know it's supposed to be down. But I'm telling you, if markets weren't being held up here at these highs, this stock probably would have crapped out. It might even be low 200s, maybe even sub 200, in my opinion. But you can see the MACD was about to cross to the downside, and then we popped it up today. So, again, I know it's after hours, 420, shout out. But in my opinion, I would buy puts on McDonald's. But that's just me. Here on the weekly, we can see RSI still below 40, making a little bit of a comeback. But you can see they brought it down and they were just hanging it out. And, it was just hanging out down here, basically flat. They bounced it off of the 200-day moving average recently. Started climbing up going into earnings again. And we have a pop today, technically off of bad news. And the stock hit a high 263.93. Mid-Bollinger Band 263.03. Stock closed down 261.42. So we technically did reject off of that mid-Bollinger Band, and we may step down and try to retest this 200-day moving average, 246.25 right now on the weekly. Looks like, though, again, the MACD kind of bottomed out, began this curling, and now it's possibly about to cross to the upside. But again, on a negative report, in my opinion, I don't see how it should be crossing to the upside and gaining momentum. So if this thing starts climbing again and gets up to 270, 280, back to 292 after this earnings report, I mean, in my opinion, I would probably like the puts even more. And this is why, again, I say that personally, if you can afford it, and I know it's probably going to be expensive, but if you can afford it, something like this, kind of waiting for a quote-unquote BS reaction to kind of play out to a more realistic reaction, chances are you're probably going to need at least 1, 2, 3 months of time on those put contracts. So if you're in a smaller account and you can only afford, like this Friday, a 230 put or something like that, that may be extremely speculative. But like I always say, time is king, and if you can buy time on some puts here on MCD, in my opinion, it really should work out well for you. And we'll look at the pivot points real quick. We could see 258.41. Technically got above it, was really rejecting multiple times off of that level. Now it comes up, and that's why I'm saying now it looks like they might want to bring it up and test these moving averages of around 270 plus on both the daily and the weekly. But even if they do, it really should reject and it should come back down. In my opinion, it really should come back down. We have a support level down here, 223.89. And I was looking for, this is like 230, this pullback to this trend line. If we check the daily, you can see basically just like the mid-Bollinger Band, we had a slight rejection. Company rejected also before earnings, but even today, 262.17, stock closed 261.42. So technically rejected and closed below this resistance level and the mid-Bollinger Band. So only time will tell what happens, but in my opinion, it really should drop down. And, I'm not going to keep milking it. I stated my case, and also hypothetically, if we extend this line out, let me just back this up for you, because this is all time. Yeah, see how we go all the way back here? Basically, from when it hit the tape, you're talking back into 68 connecting to the same bottom, basically, that this support trend line started out at for the 230. If we go back from 68 all the way to March of 2003, this is now our all-time support trend line. And if we were to zoom in here, we can see that hypothetically when our earnings, like here, hypothetically, if markets really begin to sell off, and let's just say we start to break these support levels, we could be looking at, yeah, it looks like about 200 a share. Third week of October, potentially. If we break straight down through these levels, you're looking at about $200 a share. If it, comes down here and then they beat and it bounces and then, some time passes, as you see, you're going, now April, May 2025, you're looking at, 212, 213, 215 a share. But overall, in my opinion, this stock, if we wake up and it's down 50 points from these levels in the low 200s, myself personally, I would not be surprised and I would think it would be justified. But I stated my case, but I'm very curious to hear how you guys feel about MCD, because even a lot of people in the Discord were kind of thrown for a loop. Like, yeah, they missed earnings. Everyone seems kind of bearish on it, but yet for some reason the stock is up. And this almost reminds me, oh man, what was it? It was Disney. I remember specifically too. I said, in my opinion, Disney puts going into earnings, and a couple of people in the Discord had some time. They bought like 2-3 weeks on the contracts, and Disney missed earnings, and then the stock was up 5% the next day. And it was climbing 3%, 4% throughout the afternoon. And a few people actually got upset. They thought we called it incorrectly, and they just took the loss and they got out of the position. And the very next day, it sold off like 6%, gave all of those gains back, and continued to pull back. And then the people who had 3, 4, 5 weeks of time were posting the profits that they made off of Disney puts in the Discord. Basically throwing, a little kudos my way. Hey, listen, I stayed the course, I appreciate the heads up. And this is what I mean. This is why, again, something like a McDonald's going up on an earnings miss, it should be lower technically in theory. Something like a Tesla popping last quarter, for no reason. This is a company that is consistently missing earnings. And if we go back to some of the earlier stocks we looked at, if we pull up something like a Verizon or a Hershey, right? Or even like SB, Safe Bulkers, if all of a sudden these stocks started missing earnings 3, 4, 5 quarters in a row, they'd be dropping hard, they'd be hitting new lows. They wouldn't be rebounding because of some BS technical level or the RSI got too low. I know you traders always want to bring up certain tech indicators, and believe me, I respect it, because we know how the market works. If you can be in and out and make money, whether we agree or disagree, more power to you. But in general, I'm sure you can appreciate what I'm saying. And if these markets weren't being held up, in my opinion, at these false highs, again, my opinion, a lot of these names that you guys are playing and looking at would be nowhere near their current valuation. But let me know down in the comments section how you feel about MCD, whether you're a long-term shareholder and you're going to hang on and you're buying on these dips, or if you heard about them missing earnings, you see that they're up, and you possibly kind of agree with my sentiment, and you may, short shares or play some puts maybe over the next couple of weeks or a couple of months. Let us know down in the comments section. But I'm going to end it there. So once again, this is Stocks by the Numbers. I want to thank you guys for stopping by. If you have any questions, comments, or concerns, drop it down in the comments section. I'm usually pretty quick to reply. Thumbs up algorithm helps me get more eyes on the channel. And of course, subscribe to the channel. That is our handshake agreement. That is how you help me help you. But more importantly, moving forward, like I always say, I understand that markets are rocky and they're volatile and they're very uncertain. So I want to wish all of you success. Hope everyone makes a couple of dollars. Thanks for your time.